If you're holding XRP, you have to watch this video before the institutions step in. We're standing at the edge of something most people aren't even looking at yet, and that's usually how it starts. Not with fireworks, not with headlines, not with price candles ripping through resistance, but with silence. History doesn't announce itself when it's being built. It only becomes obvious after the foundations are already set. And right now, while most of the market are watching meme coins, narratives, and short-term price action, the plumbing of the global banking system is quietly being reworked. This isn't about hype. This isn't about another crypto cycle, and it's definitely not about speculation. What's coming is the migration of real economic activity on programmable infrastructure, payments, settlement, liquidity, credit, treasury flows, the things that actually move the world. And those systems don't care about the narratives, they care about liquidity. So if you own XRP, this matters more than price ever could. Every major economic shift in history has followed the same exact pattern. They trade routes expanded before empires. Railroads became industrial dominance. The internet was built, but long before social media and trillion-dollar tech companies, infrastructure always comes first no matter what. And today, the global financial system is still running on infrastructure designed for a world that no longer exists, a world filled with closed ledgers, limited operating hours, fragmented currencies, and pre-funded accounts scattered across borders. That system works until it doesn't. As global trade accelerates and capital moves faster, friction becomes liability, settlement delays becomes risk, idle capital becomes insufficient, and insufficiency at scale becomes instability. That's why the conversation has shifted. I mean, quietly, from speculation to settlement, from tokens to liquidity. Here's the part that most people are missing here. Banks don't operate in isolation. Corporations don't settle in one currency. So these governments don't transact in single systems. The real world is messy out there. It's interconnected, multi-currencies, multi-jurisdictional. And when systems need to talk to each other, they don't use hype. They use something called liquidity. Think of liquidity like oxygen. You don't notice it when it's abundant, but the moment it disappears, everything stops working. You can't breathe, right? Market cap doesn't move money. Narratives don't settle transactions. Liquidity does. I'll say that one more time. Market cap does not move money. Narratives do not settle transactions, but liquidity does. And liquidity isn't just about volume. It is going to be about depth, okay? The ability to move large value without distortion, delay, or counterparty risk. That's the difference between a system that scales and one that collapses under its own weight. So imagine two countries trying to trade directly. In theory, that sounds amazing. It sounds simple, right? But in practice, it rarely is. If I want to move a small amount of value between two currencies, I might, find a counterparty, but once you scale that up, tens of millions, hundreds of millions every single day, and suddenly liquidity just disappears. It vanishes. It's gone. Not because the demand isn't real, but because the market depth just simply isn't there. Historically, the solution has always been the same: a bridge. Gold once played that role, then reserve currencies took over, and now the digital era is forcing a new question. What happens when liquidity itself, becomes programmable, or when value doesn't need to sit idle in pre-funded accounts, waiting for businesses to open up again, waiting when capital can flow on demand globally, instantly? That's not ideology. That's engineering right there. So here is something almost nobody talks about, and that is that every single dollar in the world locked in a Nostro account is a dollar not working elsewhere. So at scale, that's trillions of dollars removed from productive use, just sitting there for no reason to make sure that payments don't fail. It's a hidden tax on the global economy. Now just imagine trying to support global payments, purely with fully reserved digital dollars. The liquidity requirements becomes enormous, unsustainable right there. So that doesn't mean stablecoins don't matter, because obviously they do, but at an institutional level, efficiency is not optional, okay? So these institutions, they need this efficiency to be mandatory. So the question becomes this: how do you provide liquidity on demand without draining the system? And here's the answer to that. And when there's digital assets specifically for liquidity, they start to matter, okay? We need these assets to have specific specific liquidity. Okay, so there's a mistake that a lot of retail investors make every single cycle. They watch the price first, they watch, everything going up, but then they forget about infrastructure. They put infrastructure last. So institutions, that's the smart money. They do the complete opposite. They don't ask what's pumping right now. They ask what survives under stress. Before the internet exploded, standards were built. Before cloud computing scaled, protocols were established. Before global finance evolves, rails must exist. Okay, so connectivity comes first, liquidity follows, usage scales, and price becomes the outcome, not the driver. This is why moments like this feel boring to most people. Nothing looks exciting yet, but every transition is a distraction phase. During the dot-com era, it was pets.com. During the housing market bubble, it was speculation flipping. And now in cryptocurrency, it's meme coin cycles and short-term noise. While attention is pulled one way and the other, infrastructure is quietly, being built right in front of your eyes. This is where positioning happens, not emotionally, not publicly, but in a method. By the time the shift becomes obvious, the advantage is already gone, the opportunity is gone. The system being built isn't for today's volume. It's for a world where assets are tokenized, where settlement is continuous, where capital moves 24/7 across borders, where systems are, being able to integrate with each other instead of having to compete. In that world, the assets that survive won't be the loudest. They'll be the ones that are trusted with responsibility, handling real value at scale under real constraints. So that is going to be something that's a very different game than speculation right there. That is why, this moment that we're living in right now, it feels quiet because the price has not caught up. Narratives haven't shifted. Mainstream attention has not yet arrived. But beneath the surface, guys, liquidity is being positioned for a future system that approaching faster than anything you could even realize, faster than anyone can realize. If you've been paying attention, this does not feel sudden. It honestly feels inevitable at this point. History rewards those who study structure, not noise. So if you own XRP or you're watching the space closely, understand this. The biggest move does not start when every single person is watching. They start when no one is watching. And by the time the world realizes this change, the foundation is already locked in place.